What's up, guys? It's February 21st, 2025. I think we had a really good trend day today. I think this was like the first small pullback trend we had this year. Pretty interesting day because we can count so many legs up depending on how you want to start. You could say like one, pull back like two, pull back like three. You could say pull back like four. I was counting them like this, like one, pull back like two, pull back like three. Any leg past leg two, so like one, pull back like two. Even with this specific example, the leg one has a lot of overlap, so it's not strong leg one. But what I'm getting at is leg one, pull back leg two, and then pull back leg three, puts into a trading range. The probabilities for trend continuation after three pushes in one direction significantly go down because that's part of the market cycle. The market cycle goes breakout, channel, trading range. Channel starts after the first opposite bar. Trading range starts after the second leg is passed. So any leg past leg two is trading range behavior. And eventually that's what we got here. We could already see bad follow through here. Bears got a tail here. Bears get a tail here. Bears, this is a lower high, tail, leg one, pull back, climactic leg two, selling off into support here. And then, Bears are going to keep going for the breakdown here and here. I've been actually really liking the 15-minute chart. I traded an options account today. Just wanted to take a break from the prop firms kind of annoying me, but I'll get started on that again next week. So trade my options account and I shorted bar one. Bar one today, I shorted it. And the reason I did that was because I've been really watching the 15-minute on the overnight session. But nonetheless, even if we're not looking at the overnight session, look at the 15-minute chart here. 3 bars down, strong to get its own second leg. And you could argue this is a second leg. It's a lower high that rallies. This rally is testing the breakout point here. I saw this, and then I saw bar one on the 5-minute chart reject off yesterday's this bar. So I'm kind of doing multiple things. Hold on. So this 78, 77, 78, or actually that's overnight. Is it? Okay, we're not going to use the overnight session because I don't think the 15-minute chart is on the overnight session. Okay, regular and regular. So yeah, we're kosher. These 3 bars is this bar right here, and these 2 bars are these 6 bars. When I saw us rejecting off yesterday's breakdown level, I was like, okay, let's go to leg 2, and then it got stronger as the day progressed, so it helped. So I think really good context, really good setup from a leg 1, leg 2 perspective, and today we can also see 3 legs lower. Leg 1, breakout, pull back, first reversals fail. Another very strong leg. This is a leg 2, but this leg shot up to get its own second leg. And you see that again, first reversal fails, backing down. Look, so I was talking over here about 3 legs higher, and how it's trading behavior. Look at how leg 1, pull back leg 2, pull back leg 3, possible pull back leg 4, leg 1, pull back leg 2, pull back leg 3. Even with all this strong selling, the third leg was weak and it went more sideways in the third leg. Because after so many amount of legs down, trade bears in this case have to take profits. So after leg 2 is the highest probable trade, people start taking profits in leg 3, and usually leg 3 is actually I'm not gonna say that. So yeah, trading range behavior, leg 3's that probabilities for trend continuation go down because of market cycle tendencies. Not gonna go over that twice, but I'm saying like how we just applied this idea on a daily chart. It sold off. We use the same concept here, 3 legs down, and then we go sideways. So that's why I really firmly believe in leg count and market cycle, because they're fractal. All time frames, respect them. All coins, all anything. We can get really good at the market cycle and leg count, and we have a lot of room to play. And I'm starting to feel that. I never thought I'd be trading options accounts, but I just did. I just got a little bit tired of trading the prop firm money, but I'll be back on that on Monday, so it'll be fun. And it doesn't matter what I'm trading options, I'm trading futures, I'm trading 5-minute, 15-minute. I'm looking at the daily chart for context. It's all the same perspective. Market cycle, leg count. Are we breaking out or reversing? And then slowly, the more you think about it from the one perspective, your brain or something happens where it starts tying things together. Like you'll see this correlate with this, and this is the 5 minute. Then you go to 5 minute, and you'll see the 3 minute, and you'll see the 1 minute, 2 minute. It takes time, but I really, really believe if we focus on one thing, we can speed that up. So you guys got the daily breakdown, the 15-minute breakdown. Let's go to the 5 minute. Let's take a peek at these gaps. So there's a gap here, a lot of gaps in the second leg. So there's more overlap on the first leg. I think we're still trading range behavior. And then a lot of gaps on the second leg, and then we go more sideways at the end of the day. Just so we can count on the back of our heads while we're thinking, while we're talking. So we already know yesterday we had a leg one, wedge bottom. We rallied back to the breakout point, bar 3. Today, that's around where we opened. Oh, excuse me. I guess we closed on the EMA. Today, we opened up on that close. So there's no gap. What I mean is that's what I mean. There's no gap down. It was 81, bar 1, overlap, pullback, breaking out below the EMA, breaking out below both EMAs. Also testing here, gap down, leg 1, deep pullback, testing the 75%, testing the highs. So if this was 75, it would be like 150, 75. What the heck? 100. I don't know. I don't even know where I was going with that. This is testing the upper third of this trading range, and this trading range had a lot of bullish price action, so it was a gap down, and it ended up being a better buy. 3 types of outcomes. We have higher low, same high. I guess that was a new high, and then we have the same high here. In this situation, we got the lower high, which is more bearish and bullish. Start to break out. We see many bars, 81, bar 1, bar 2, 3 bar micro channel, bar 3, opposite bar, creating its first pullback for these 3. Same concept on here, you know, 3 legs lower, 1, 2, 3. First pullback fails, multiple legs, first pullback fails, multiple legs, first pullback fails, bar 4. Breaking out of the 3 bar micro channel range, we follow through bar 5, but there's a tail, so I think buying is starting to stack up. Bar 6 is an inside bar. Remember the shotgun idea with momentum. Shoot a bullet into a box, it's going to come out in the same way. Generally, it comes out if it's less than 20 bars. So if we shoot a bullet into this box here, shoot a bullet into this box here, the momentum should shoot out the same way as long as the context adds up. 6, 7 bear bars, sell off, rally back. 8, another inside bar, bar 9, traps bulls here, it rallies, but then sells off, trapping bulls. Bulls have a microsecond to buy this and get out 50% on bar 10. They do that, and it causes a good bar 11 sell off. Bear bar closing on its low, out range lows. I think it's good for its own leg 2, and it gets that leg 1, pull back leg 2, pull back leg 3, 3 legs. So I'm counting leg 1, pull back leg 2, pull back leg 3, and then within this second leg here, I'm counting 3 legs down because I see 3 tails. Leg 1, pull back leg 2, pull back leg 3, and then we go sideways trading range behavior. Leg 1, pull back leg 2, pull back leg 3, more sideways price action. Same concept, bullet in a box. We use this bullet in the box, sideways price action, momentum keeps going down. Trading range behavior, 3 legs lower, more sideways than trend continuation. We see that with bar 16, pull back 18, pull back, new high 23, and then we go sideways, creating a double top at the EMA. 3 bear bars, I think good enough to get its own second leg. Then we see these 3 bear bars start to break out below the EMA with 35. 36 is a bad bull bar to buy. If you think a failed breakout for reversal back to the EMA. There's a lot of bear momentum. We're in a bear regime. 37, good bar breaking below this flag here. And now bears are starting to get good bars closing on the lows at a new range. 38, leg 1 could be, I'm counting it as leg 1 because of this range, but there's so many ways to count legs. You just have to respect the main rules is avoid leg 3s. 4 bars in a row trying to get its own second leg down, and it does with this wedge bottom here. I actually got out on this bar thinking we've had 3 legs lower, and then I missed these 3 bars, but I held from bar 1 to down here. I caught the one rare day. Now it's going to go back to sideways, so I'll go back to scalping. I like scalping, but it is challenging sometimes. Commissions add up. So we have the strong bear leg creating. Remember, this second leg had the most gaps. There's only 1 leg here because it was off a trading range. So this second leg had a lot of gaps, trying to get its own second leg, and it does 58, 59, 60. So So I kind of sped through that, but you know, bulls have three attempts higher. Like one, pull back, like two, pull back, like three, or you can say like one, pull back, like two, pull back, like three. Trading range behavior, market cycle reset on a smaller time frame, breaks out, like one, pull back, like two, pull back, like three. Trading range behavior, third leg on a smaller time frame, and we go sideways for the rest of the day. So really good day for the bears. They did some damage. Let's see how many. 100. All right. Oh, wait. Bar one, actually. Bar one's high is 105, so about 105 points. And I was looking at measured moves like this today, which is why I got out around 54, because I thought, okay, 3 pushes down, we're on the measured move. And I actually had an extended target just to be funny, like, because if bears are catching all these breakouts, they're going to just keep going lower. Same exact concept how I said they want to keep going to breakout points here. That's what we see on the 5-minute. They wanted to keep, so they broke here, next target here, here, here. And I was like, this would be their final target. And it almost hit, which is pretty crazy to think. But measured moves, it was a leg one rally, a leg one pullback rally, and then we started to break out, retesting the lows as well, which I really like this price action, how it lined up with the EMA and it lined up with retesting the lows. That's how I had my I hope you guys can't hear me drinking. I had a sip of coffee just now. Let me know if you guys heard that. I'll mute the mic next time. I really like just I don't know, today was a pretty good day. Price action. I hope you guys banked. Leg one, pull back, leg two, pull back, leg three. You could say leg one, pull back. But what the heck? Leg one, pull back, leg two, pull back, leg three at the end low of 13. Inside bar. Like 4, 15. 15 is the nice looking bar out of all of these. And then we only had one gap open right here, remember? You know, the peak. This gap is what I'm talking about. There's only one gap open with all these bear bars, so there was a lot of overlap because there was a lot of support levels right here. Just how we talked about bears breaking this, same exact thing. Bears are breaking these. They break this one, new low. Break this one, new low. Break this one, new low. Price action is fractal. I promise. If you focus on market cycle and leg count, it for like a year or two. I'm only in my second year of looking at it from this way, and I'm really starting to see the benefits to it. It's very interesting. I've never really got, this is the most in-depth I've ever gone with anything, and it is just getting deeper, deeper, and deeper. It's really cool. I like it. I like it. There's opportunities here. So 3 legs down, sideways price action, bullet in the chamber or bullet in the box, shoots it, momentum comes out the same way. Sean's to get its own second leg, and while that's taking place, we're breaking out of a range. So the market cycle could be shedding on a fractal perspective. Leg one, pull back leg two, pull back leg three. A lot of legs in here as well. Like one, pull back like two, pull back like three. There's actually 5 pushes. Like one, pull back, push two, push three, push four, push five. That's breakout mode, trading range behavior. Bulls couldn't even get back as soon. Here we go. Let me just draw what I'm talking about. So we're going to talk about this from a market cycle perspective. Market cycle trading range behavior breaks out. Here's a trading range, rally, sell off, breaks out of the trading range, goes for 1R. What was I doing drawing this? Oh yeah, so so after the breakout, the market cycle leg count resets. Like one, pull back like two, pull back like three, sideways price action, but bullet in the box idea. So there's more momentum going down. Bulls have leg one, pull back like two, pull back like three. They get the bulls that bought here get a second of relief on bar 57, and it dumps for a final leg lower 58, 59, 60. Pretty good day. Trying to get into the groove of doing these breakdowns longer again. I kind of lost momentum when I blew up all my accounts. I just was acting like I just couldn't even look at a chart for a while, but trying to sneak back into it. So I'm drawing measured moves here. These are a little bit bigger measured moves than I usually go for. I'd go for 3-bar measured moves, or I go for just a scalp. Well, that's what I used to go. And my vibe I get from you guys is a lot of you are swing traders. When I'm scalping breakout points and going for 1R of the breakout bar. So see how bar one that made 1R fairly quickly. So I'd put an order there and get filled on 4 and scalp out there. Today would be an interesting day because limit orders really wouldn't get filled, so market order traders had the upper hand. Here's a trading range that broke out here. You guys saw this trading range that broke out already. Here's another 3 bars, pull back, 36, so you put at the high of 36, and that meets 1R. Then you're like, oh, I want 1R of this. But you know it's getting kind of climactic, so you'd be generous. High of 46, you could put at the high of, high of 45, high of 46, and that's met. And then start to think, okay, even if I short this, you gotta be very scalpy. This is climactic. This is nice looking bars. This gap didn't even get close. So bears got strength. Hope you guys have a good weekend. Hope you guys are learning. Do me a favor and share the show. The way I can grow this channel. I appreciate you guys. Thank you, everyone. Drop some questions in the comments, and I hope you have a good weekend. I'll talk to you guys in the Discord. Link at the bottom. Bye.